Clayton Mills here with the Mills Realty Group. Today I have Jason Marin with the Fairway Independent Mortgage Corporation. And I think I met Jason probably about a year and a half ago, and he's helped several clients of mine, and he actually helped me buy this house that I'm standing in right now. So Jason, thank you for joining us.
It's a pleasure to be here, Clayton. Happy Saturday morning.
Yeah, happy Saturday to you as well. So Jason, good to talk to you again. So for the people out there watching, why don't you go ahead and give us a little background as to who you are, where you're located, and how you got into the mortgage industry.
Fantastic. Yes, Jason Marin, like you said, Fairway Independent Mortgage, and I am just about a year and a half in total with the company. About a half year where I've been full time, and I say that because last year I was actually a teacher during the school year. It was my 13th year teaching. I was a math, high school, computer science, good geeky stuff that's out there, and like most teachers do, I had a part-time job, and so that part-time job got me introduced to a branch manager with Fairway Independent Mortgage, and she said, you need to start slinging loans with me." And so I said, okay. I really had no idea what was going on at that point, but she just said, "No, you know math, which means you're logical. Let's get this going." So she recruited me, and when COVID canceled summer school a couple summers back, that's when I got the license. And yeah, been working the loan since then. And like I said, this last spring, I resigned from education because trying to do both jobs wasn't good. So I
Yeah,
had to figure out which one I wanted to do, and this was the one that won. And yeah, made the transition.
great. How you liking it so far?
It's absolutely fantastic. I look at this as just another way to serve the community, and it's amazing. You know, you get to that closing table and help making people's dreams come true. It's just a wonderful feeling when you get to that point in the transaction, and everybody's just excited. So it's a great time.
Yeah, no, I feel the same way. Helping people just makes you feel good, any way you can get to that closing table, seeing people's faces, helping families. It's really, makes you feel good. So for those out there watching, looking to purchase a home here in the near distant future, what does getting pre-approved for a home mortgage look like nowadays from maybe a high level perspective?
That's a great question. And I know realtor side, they love to have clients come in with that pre-approval letter. That way they know a couple of pieces of information about the client, mainly like what kind of price range they're looking at, and then what kind of opportunities they get to go with. So from my perspective on it, from my side of it, we try to do a pretty in-depth look at the financial side of the clients. Credit worthiness piece is always the one that we want to try to go with. And so between the credit score, the debt to income ratio, and then whatever down payment they want to use. Those are like the three primary pieces that we start out with. And so people have to come with pay stubs, W-2s, bank statements, just some of that basic information. And like I said, we pull that credit report, and then from those numbers, we just kind of mix and match and say, here's a program that's going to work best for you. And then discuss other options in case they want to explore some other opportunities. And once we get that information all put together, then we can get that pre-approval out. It's one of the things with Fairway that I love is that we don't just kind of take it at its word and then realize down the road that maybe somebody doesn't qualify. Like we really try to do a pretty in-depth job of making sure in that first step that the clients are good to go. And yeah, it's been a great time to explore that information with clients to make them realize, hey, I'm good. I can get a house I'm looking for.
Yeah, no, exactly. And in my experience, one of the things I think that people are a little bit afraid of is they get kind of caught up in the whole pre-approval process of, bank statements and W-2s, tax forms, and it really isn't that bad. I mean, once you get the ball rolling, I mean, you and your team do a pretty good job of getting a list together of what people need to get and keeping the ball rolling.
Yeah, it's good. Full disclosure is the piece that we like to go with because obviously underwriters don't like surprises. So again, you tell me some of your story, I figure out what information we need out of that, and we get it done.
Yeah, yeah. So for those of you watching this, if you could just leave us a comment below if you're watching live or if you're watching a replay. And if you do have any questions, feel free to leave them below in the comments as well. We'd be happy to answer them for you guys. So, Jason, what types of loans are out there for home buyers? Maybe can you give us a quick overview of some of these types of loans and why they might be right for certain individuals?
Sure. Yeah, so conventional loans are the ones that I think people find to be the most popular. You're looking at like a 620 credit score and above. And this is the one that, people think the golden nuggets have my 20% down, which, yeah, that's a good number to have. We'll talk about other options for down payments a little bit. But conventionals, they go down to 5%, and even certain parts of the conventional loan programs, they can get down to a 3% down payment. So it's good in that aspect. It's the one that's um, I suppose, from a lending perspective, the appraisal is the easiest one to get through with the conventional loans. And so, we try to, I don't want to say we try to push for that one. We just say that this is going to be the best one to get into if you qualify. Second option that we like to throw out there, either the FHA or the USDA loans. And those are government-backed loans. FHA, they start out at 3.5% or 10% down payment. It's got a bit more flexibility with the guidelines in there, so sometimes people can find that loan a little bit easier to get, and kind of the trade-off is that the appraisal is a little bit trickier, but that's just part of a government loan. The USDAs, they can go down to like a 0% down payment, actually. That's they can get a fully financed loan. That one's got slight geographic restrictions because they want to do more development in like rural areas, and so your bigger cities, more denser population places probably aren't going to get that. But the USDA and FHA, a lot of their guidelines are very similar, use the same appraisal. And so it's just one of those things where it's like, yeah, I've got no money to get in. Okay, we can talk about USDA as an option for that. Another one that we have is the VA products, the Veteran Affairs loans. Those mortgages are obviously geared towards veterans. Again, we do that investigative work up front to find out what they would qualify for with that information. But that's another one where they can get 0% down if they've done anything service-wise for our country, which obviously is doing an amazing, wonderful thing. And we definitely love to help out the VAs because we do other not-for-profit work to go along for the VA population. Jumbo loans, those exist out there. We have our partners out there in the lending world that'll get in with us on jumbo loans. And so those are the ones that are above that conforming loan amount, which actually just jumped up. 624,200, I think, is what the number is now. So those bigger dollar amount loans, if you got bigger properties and you don't have a ton of money to put down on it, there's still ways to get to those as well. So those are kind of the five main areas that the loans get to come from. And you talk about down payment assistance. People are like, yeah, I'd love for it to be a conventional loan. I don't have all the money for it. Again, you can go down to that 5%, and there's even ways that we can get that 5% covered with other financing options.
Yeah, no, those are definitely some good examples. And honestly, the thing that I find interesting is when I'm taking buyers out, right? We're looking for houses, or we're just getting into the first steps of, hey, what can I afford? Where do you want to buy? One of the things that is surprising to me is usually they always think that they have to have 20% down, right? So if you're buying a $200,000, $300,000, $400,000 house, I mean, that can add up pretty quickly. And when I tell them that, hey, there's loan programs out there where you might be able to put 3.5% down, and in some cases, like you said, no money down, they're just kind of blown away. They couldn't even believe, because they were expecting to have this much money down, and all of a sudden that just cuts it by, 3/4 or even more. So I think it's really good that people would know the types of loans that are out there. And yeah, thank you for sharing that. So I know that in my business, when I'm working with clients, some get pretty surprised when they find out how much they can actually get approved for. So do you find that people are sometimes afraid to ask what they can get approved for, or maybe even afraid to ask their lender, what they meant when they were talking to their lender when they said something? What they can get approved for, or maybe even afraid to ask their lender, what they meant when they were talking to their lender when they said something?
Yeah, sorry about that. My computer lagged for a second there. We're talking about people trying to get pre-approved, right?
Yeah.
Yeah, there's fear out there. People think if I don't have 20% down, or if I don't have perfect credit, or if I don't have this, that, and the other thing, it's like, you don't have to think like that. Your best bet is to go out there and get educated. ask a loan officer, ask a lender, find out what it is that is going to be good for you, what it is that's going to be good for um, your situation, and don't be afraid to throw out those questions. And I get people all the time, well, I don't know if my credit's good enough. It's like, well, your credit doesn't have to be perfect.
Right. Right.
There is a good enough level, there's really great levels, and if you're somewhere in between there, that's fine. And if it's not at that minimum level, I can give you suggestions on how you can move those things up. But obviously all that comes from asking those first questions about how can I get a loan.
Right. So when we talk about loans and we have, the LTV, the DTI, the credit, can you explain what some of those acronyms mean to people out there?
Yeah, and credit is what it is. It's your credit score from previous lending opportunities that you may have, credit cards, and so on and so forth. So that one is it's just pretty straightforward. We pull a credit report, life is good. DTI, so that's the debt to income level. And here's one where, again, people sometimes get confused on what that's actually looking at. What we do is we go by the gross income off your paychecks, not the nets, so not what you take home after all the deductions have happened, but the gross numbers. That's whatever hourly or salary amount that you have, that's the top number. That's the one that we get to use for determining that debt to income level. In terms of the debt side of it, that information comes off the credit report. If there are monthly liabilities, monthly responsibilities like your credit cards or other installment loans like student loans, car loans, all those numbers, we just add up what those minimum payments are. And I know it sounds weird thinking, yeah, you got to work with minimums. It's like, but that's the way the government has this thing set up with the guidelines, is that we take whatever the minimum amount is that you're responsible for on a monthly basis, and we take that and divide it by how much income you bring in on the gross income side. And so that debt to income ratio gives a certain percentage. And again, each one of those programs between the conventional and the FHA and the USDA and the VA loans, they have like a certain threshold of your debt to income percentage. And if you get above that threshold, you're not going to qualify. If it's below, you do qualify, and so on and so forth. And they're program specific. So it's hard for me to say, yeah, this is the hard and fast number you have to have with it. But it's just a calculation that has to be thrown into the mix. The LTV, that's loan to value. And so that is the actual mortgage compared to the value of the home that you're using to secure that loan. And yeah, 80%, that's that nice number to start out with, was that 20% down payment. But like you said, we can go down to that 3.5% range, 5%. There's a lot of flexibility that's inside of there for that, for those loan to value numbers. Obviously, the private mortgage insurance is the one thing that people freak out about, and I think that's something we're going to talk about in a little bit here too. But it's just one of those things where it's like, if getting into a house is important, and you and I both, since we have a little real estate investment pieces thrown into the mix as well, it's like the game is there for everybody to win if you're able to get to the real estate, whatever it is. If it's a personal house or investment opportunities, it's there and it does wonders for you.
Yeah, those are definitely good answers. So speaking of interest rates, I think they're on the rise, right? Is that going to mean maybe a little spike in mortgage rates as well?
That is correct. Yeah, so the 10-year bond is what most of the mortgage rates is kind of like they start out at for the information they get. Once those bonds, so the bond yields, once those numbers start going down, the interest rates have to go up, because essentially the federal government has to have X amount of dollars to back up each one of those bonds. And so if they're not making as much money in that bond market, then that's where the mortgage rates have to start moving up a little bit to recover those gaps. And I mean, there's all kinds of, there's so many different factors that go into it, but we've definitely seen in the last month and a half, 2 months here, where the markets have gone absolutely haywire. And so the interest rates have been bumping up, bumping up, bumping up. Some days they jump. And I'm not talking like a half or a quarter point or anything. I'm talking like the pricing that we have to use. The pricing model has some pretty significant jumps, and it might translate to an eighth, maybe even a quarter swing in one particular day. It does stabilize itself a little bit, maybe a day or two later. So it's kind of like this little teeter-tottery thing. But yeah, they've been on a kind of a slow and steady increase over the last 3 or 4 months, and they have it predicted to continue to climb throughout the rest of this year. Will you see a 30-year mortgage at maybe 4% by the end of the year, 4.5% even? I mean, it's a possibility. Nobody's going to be able to predict that, but it's definitely the days of getting that below 3% on the 30-year. Those things are behind us now, and it's still phenomenal as far as an interest rate. I mean, don't get me wrong, those numbers just don't great. Most people, you ask the 50 plus age group, and they'll tell you, yeah, 12% I thought was phenomenal when those mortgages were happening back in the 80s. They'll be like,
Yeah.
yeah, to hear these interest rates now are still just a miracle, kids. So go get your loans, go get your mortgages.
Yeah. So what would you say the 30-year interest rate is at now? Is it about 3%, 3.5% now, or is it closer to 4? Or
Yeah, I mean, we know that the credit and the loan value, those are the two pieces that really determine
yeah.
what somebody's going to get in for. But I'd say your better interest rate right now might be in that 3.5,
Mhm.
3.625, somewhere around that range. Uh, again, the other factors go into the mix with it, but I'd say that's probably a pretty decent rate if you can lock that one in right now still.
Good, great. And I know you mentioned PMI before. Can you explain to people out there watching what PMI stands for and what it really is?
Right. So private mortgage insurance, that's what the PMI stands for. And that's so you get a house, there's that two potential insurances. So the one that's your homeowner's policy, that's just to protect the house from if something happens tragically, fire or whatnot, then that's going to replace your house. Private mortgage insurance is the insurance that the client would purchase that protects the lending institution if that loan amount is higher than 80%. And again, that's talking about in a conventional with FHA loans, you 10% down, you get PMI for 11 years. If it's 3.5% down, it's technically on there for the life of the loan. And, we talk about ways people can get out of that down the road. But yeah, so that PMI, that's a protection for the lending institution for if somebody defaults on the loan. And they think the more skin you have in the game, the less likely you're going to default. And so that's why they put that marker of 20% kind of as that arbitrary number, as that's where we want to have people in, where we feel like they've got enough vested interest right now that they're not going to default. And so less than 20% is where the banks just feel maybe they don't have as much interest in this, maybe they'll default. And so that PMI, that private mortgage insurance, then protects the lending institution if the client defaults, and then helps recover some of the money on that. So is it necessary? I mean, obviously the situation is dependent on each individual client. Is it something that, I look at and say, don't be scared by it? I would absolutely say, don't be scared by it at all. I mean, if getting
Mhm.
into a house is really what's important, if starting to build that equity and start to, gain wealth of that home is important, then who cares about PMI? Let's just get in there and make it work.
Right.
But yeah, that's one of those things where a lot of people, they think, well, if I don't have 20% down, I'm out of luck. And it's like, well, no, we can make it work. We can figure out something that's going to help you and still make sense.
Right. Right. So I think as we're wrapping up here, I think the last question. So if for those out there who are looking to make a move, what would be maybe just one or two pieces of advice that you would give them right now to help them with the process?
First thing I would do is figure out what your credit score is, to be perfectly honest. And we talked about down payments can be down as 0%. So in thinking about if I do or don't have a down payment, I wouldn't be sweating that one too much, but I definitely take a look at that credit score. If that's through, Credit Karma, they can usually give you a rough estimate, like a ballpark that people can use. Or if it's actually calling up a loan officer and saying, I want to fill out an application because I know my credit's getting pulled and I just want to know exactly what's there and what I can do. For some people, credit scores might lend them ready right now. For some, it might be, oh, if I do a couple of things to help bolster my credit, maybe 3 to 6 months down the road, I'll be ready. But all that information comes from that initial question, that initial ask of where is it right now? And I'll be honest, that's like the biggest part that people are, I think, the most afraid to do. They know how much money they make, they know how much money they have in their savings, but getting that credit score is probably the biggest piece of information that I would say, get it, find it out, and then we can start building a plan from there.
Right. Yeah, that's great advice. All right. Well, I think that wraps it up here. So, wanted to thank everybody for watching here, and please like, comment, and share this video if you feel you got something out of it. But thanks again, everybody, and we'll talk again soon. Have a good one, Jason.
Thanks, Clayton. We'll talk to you later, bud.
Okay. Bye bye.
Bye bye. I would say so.